Yo, guys. Good morning, good afternoon. Welcome to the Sunday Moon Boy stream. We got emergency alerts coming your way. Why the market is about to crash. So stay tuned. Moon Boy will explain it all clearly. But of course, remember, first thing being first, none of this is financial advice. We are at the end of the day kind of speculating, gambling on all this. And people with bigger pockets, they can print the chart however we want it. Now, all the signals and things we discussed today, they can occur to their best probability, but of course, not always 100% going to be accurate. Now, to start off the bat, we're going to dive in right into the Bitcoin chart, and we're going to talk about that big, ugly rejection on 82K. Before even we get into any macro indicators explaining the crash, this was significant. Guys, remember last week I specifically mentioned that 82K is a crucial level. Crucial now. Although it did flip SAR bullish, which is good, we did also notice a big fat rejection on the 82K, which is the 100 weekly moving average. And now we're crashing back down. There's actually a big reason why we're doing this. But this just kind of adds to the significance. Looking at our liquidations heat map, we can see that there was a big fat new short position that was opened at 82K. Well, actually, sorry, 84K. It's about 160K bitcoins that are put into a short position on that level that are risking to be liquidated. Now, this is just as significant as something like this. Literally only about 12,000 Bitcoin away from being a super, super heavy short position. But of course, we have all these longs now kind of waiting to get hit. They're waiting to get hit. So I did a little drawing where I measured the moves down from each point of failure on a big resistance here. For example, from the 100 daily moving average, we fell all the way down here, and these moves happened significantly. Here we broke 50 daily moving average, we fell like this. So this is exactly the same drop if you measure it. And then if you do another failure, if we break again the 50 and 100 daily moving average, I mean, and we have another flush down like this, we're going to end up somewhere here, somewhere in the 50K zone. This is going to coincide with our production costs being hit. Now, production costs did raise a little bit. I'm not sure why it didn't update here. It should. I think I have to just re-add the indicator for it to work. So if I'll do that right now, it should be updated. Voice. Sorry. Yeah. So if I re-add it, you'll definitely see the update. Yep. So yeah, as you can see, the updated indicator does show that we have support. So if we do flush down to this 50K, we would be under production costs. This is all bullish support levels. How quickly can this happen? I don't know. You know, guys are saying sell in May and go away. And now let's kind of really go deep into where these things are even coming from and why did we break 82K? For example, we have some comments here. Okay, that's just our stream elements. Guys, yeah, while I'm explaining this, if you guys have any questions, I know we kind of have zero people watching this, but anybody that's going to be watching afterwards, you know, if you have any questions, throw them in the comments down below and I'll be able to come and answer them throughout the week. But yeah, so now talking about this production cost in Bitcoin, let's go into the real issue. What ended up happening, guys? Why did the markets all of a sudden reverse? And there's a big red flag that's basically hovering all above our heads. We kind of discussed this throughout our stream, so you guys, whoever was watching back in the day, might be familiar with this. But this is basically the 10-year minus the 3 months yield, treasury yield. Now, what this shows, this is one of the most quickest macro indicators, meaning quickest, most macro indicators are long-term based, so either on a monthly, more than a month or yearly trends. This kind of reacts on a like less in between less than a month. Now, it's not instant, right? It's not always instant, but this is probably the quickest. So the other macro indicators like ISM, PPI, those are long term. Like the ISM prints once a month, so those are like really, if any significance is shown, you could be a month late. Like for example, if right now the ISM is crashing, you wouldn't know that until the end of May print, right? So, and the market can start crashing as well, but you still wouldn't know that. But this, however, you do see it updated every day. So the 10-year and 3 months, these are just yield rates. So what this shows is, short-term rates versus long-term rates. What's the difference? Is there is there a negative correlation? Is there a positive correlation? Rates should have a positive correlation. So um, a difference, I mean, so differentiation. So 10-year, you should get more yield when you give your money for longer periods of time rather versus when you give it to 3 months, right? So when you give your money to the government for 3 months, they shouldn't be paying you more, they should be paying you less, right? But that's not what it was under Biden. Under Biden, we were negative for a while. And this is what this indicator shows, is basically that when it goes negative, and then it pops back positive, maintains the positive, right? Doesn't go back to negative. So we maintained zero for a long time, even once Trump came over. But then as it goes to 1%, once the divergence now goes to normalcy, usually 95% of the time, I could even show you guys the Fred equivalent of this, which goes back all the way to like 1980. Usually there's a big recession incoming. Big recession. Now, this recession could eventually lead to basically money printing and Trump with K war pushing trillions of dollars into the system, diluting the dollar to the extreme, and then obviously all the assets are going to skyrocket. And in a way, we won't see it as a recession, but it will be more or less a stagflation. Now, will the Fed print is another big question, because we are seeing price increases due to gas. There's an ugly picture behind the wall with the Iran war, and it might not give the opportunity for the Fed to even ease. And this crash could get really bad before they even do. So keep in mind, this happened. If I go on the max rate, every time we went negative, we went back to 1, which is here. We tested. There was a recession that followed right after, especially if we crossed 1. Here we kind of went to 1, went down again, went to 1 again. So there is a delay. Again, this is not something like, hey, because this indicator just fired, it just went to 1, we're going to crash tomorrow, right, on Monday. It could be in the weeks to come. It could be in the months to come. But very frequently, when it does do this, goes from negative back to positive 1 and growing, there is a recession that happens right away, especially at that 1% point, right? So even here in COVID, we did reach 1, but the COVID crash was basically a recession that was induced by a shutdown, right? So everybody said, no, that's it, we're shutting down. That's why there was a recession. That's why this indicator, of course, was even more laggy, because it was just like people were just so confused with COVID. But in a natural environment, when there is not really COVID going on, but just like, hey, the markets are being greedy, too greedy, the interest rates are not being priced correctly, like how we saw in 2008, for example, or the dot-com crash, where people were just super greedy, they were overvaluating companies, kind of like what they're doing now. Ford is in AI, guys. Apparently, Ford is going to be developing Claude 8.0. It's not Anthropic. It's going to be the guys who are building you your pickup trucks. But anyway, so stuff like this, right? Overvaluation, speculation, greed. These interest rates show, and they start to show this discrepancy when they go back to normal. People are saying, okay, yields are back to normal, but why? When the 10-year is going towards like 5%, why are people still investing in stocks, right? So this is kind of the discrepancy. Sorry, the 10-year is going back to 5%. Why are people still investing in stocks? Or why are stocks at all-time high? So this is kind of the question that people start to ask first. And now looking at the stock market, it's not a pretty picture, guys. I have kind of 2 Fibonacci's that I had from the prior correction from Biden era, which was more or less normal. Didn't have all that crazy Trump pumping and everything like that. Biden was more or less like a traditional president. So we had the Fib. So we did go to 2.618. We rejected that. This happened last month with the Iran war situation, and obviously worries about the AI. But then that got really quickly printed out with a lot of money being injected by Trump. Promises that there is no war. Promises that they're going to go to China and they're going to figure everything out. Now it looks like these promises are not coming to fruition. It looks like the interest rates are signaling a major alert, and it looks like on Friday people saw that and they took the initial sell event. Now this is reminiscent to October when Bitcoin crashed. It did like that fake all-time high, and then it had a big rejection. So of course stocks pump a lot higher because they have a lot of more things pushing liquidity. You have 401ks, retirement. So in a way, money always flows into the stock market, and the sellers, when they do extract it, it's a significant event. I mean, something is really wrong now. Now, what will happen Monday? My guess is we are going to reject further off this 1.618, and we're going to start going down. May not be the case. Markets might stay delusional longer. My bet is that we're going to start filling these gaps. All these gaps that were created by Trump, all these gaps that were created by Trump in the tariff situation, they're all going to start getting filled. And I'm going to be opening shorts positions to capitalize this. Basically, you could also open VIX positions, which is going to be volatility spikes. There's still a big gap on this 25, so this is a nice 7-point move on the VIX. Of course, VIX will eventually signal a bottom as well once VIX starts going above 30 to 60 to even 80, if depending on how big people are going to start dumping and panicking, especially if they fabricate news and strikes and to push people to panic even more. We could go even higher on the VIX. Now we got a nice viewer. Welcome in. Yeah, and leave a comment if you have any questions so we could catch up. But this is going to be a big play, guys. And of course, you could also short the Nasdaq. Nasdaq had a similar situation, went up above 1.618, and now big rejection, big bear hold. This is what this candle is. It's kind of it's a big, and this is a hanging man candle, which is kind of signifies a hammer, but it's red, so it's a hanging man. And then of course this is a bear hold right here. Now, will Nasdaq go below and start? I think so. I mean, Nasdaq, even though it's a tech stock, they do concentrate most of the money in tech companies now versus the SPX and the Dow, for example, which failed to break 50,000 again. Another significant thing, we made a lower high here. But yeah, Nasdaq might stay a little bit higher for longer, but I don't think it's gonna escape the crush that's coming with the SPX and Bitcoin. I mean, yeah, Bitcoin is probably going to follow. It's going to be the first to get taken out. I mean, as you guys can see, 82K rejection. We went down 4 very quickly. Most of the alts went to crap. They were bullish, like ZRX. I almost FOMOed in, but now we're done. We're going back downhill. We didn't even get to the 50. And, you look at I know one of our good friends and also host for the show, Coke. He works currently with Rune. They had also a similar thing. I was very hyped about the pump recently. I was like, man, yes, finally Rune is going back up. We're seeing some movements, and now we're like almost again gonna flip SAR bearish. So like that whole move that took us from 0.3 or 0.4 to like 0.6 just got reversed in one day. So people are selling, and it's not just Rune, guys. Keep in mind this is happening everywhere. Sui, I'm sure Doge is still holding, ironically. Yay, good old Shiba. But yeah, most assets are not going to be safe from this liquidation events that are going to be coming right now for Bitcoin. So keep it straight, guys. Keep it straight. If you guys do want to open short positions, honestly, Monday is probably your best bet because yeah, I don't see the situations improving. Trump had a big failure in China. Didn't really secure anything. There's an article that just came out that said that they're not going to be buying the NVIDIA chipsets, the H200s that were the cheaper versions, or they want the real good stuff from Taiwan. They even said to Trump, "Hey, make sure Taiwan is not independent." And Trump, tweeted, "Guys, Taiwan, don't be independent." And of course, Taiwan is like Ukraine and everybody else, or America in this case. No, we're independent. So of course, if Xi starts to capitalize on this opportunity and conquer Taiwan, what will happen to the chip race? Will they all of a sudden have dominance? Will America have to go to war with China to protect the AI, I guess you could say, dominance in this case? Because China is being prepared, even though America controls the energy dominance of the world with oil. Now we have a new player, and that's going to be the pursuit to whoever is able to, I guess you could say, innovate or create the general AI intelligence. And if China creates that, we're in big trouble. We want to create it, so that's why we're doing everything we can to restrict them. And of course, the only thing we can't control is the biggest country, or I guess the biggest place in the world, because it is technically Chinese. Taiwan is producing all the best chipsets. There's no place other than Taiwan that is able to produce like 3-nanometer chipsets currently. Welcome in, guys. I see we got a couple more viewers. Hope you guys are joining and having a very good Sunday. But yeah, so this is kind of the situation in the markets. We got the crypto bubbles that we could take a look at as well to see what's going on. But I would assume it's going to be also showing us a lot of red. But we have some green, so hype is up. We're going to take a look at that. Zcash. Remember, Zcash did have a thing, but we're going to take a look at these two right now. Let's take a look. So these are kind of the big boy assets. Big doji, big doji. Now it's a little bit above the doji now in the weekly, but of course the weekly candle hasn't closed yet. It's still bullish, but it looks like we're making a lower, and there's somebody selling, guys. You see this? This is a experience. For, this is the experience I got from basically when you come in an insider project. There's going to be people with what's called what Coke. Thank you, Coke, for teaching me this concept. But has the big fat thumb. I think it's called the big thumb. Somebody's pressing the thumb every time we pump. Somebody's pressing the thumb, sell button, thumb sell, boom. Right. So that's not good. Big thumb sell, not good. That's going to prevent this coin from really going parabolically up, because there's somebody that has a lot of stake in this coin, is doing the unlocks, and he's dumping, right? So I looked at the coin gecko. I think there's something like half of the coins is still being unlocked, if not more, for hype. So guys, be careful at the moment. Let's just see where everything goes. And I think if Bitcoin is going to be going to 50K liquidations, I doubt hype is going to be making all-time highs. Similarly, we could look at Zcash, who had a very strong performance last year, and of course recently. Now again, we did flip bullish, but it looks like we again just briefly peaked above 1.618, and now are having a bear hold candle to the downside. So good short opportunity. Now it's a little bit of early short play, but if you look at the daily trend, it is a short opportunity. And as you can see, it did flip, and we're barely kind of holding on with another doji. We could fall very quickly back to these support levels at 300. So another good short opportunity for Zcash on a daily trend. Now remember, keep your stop losses. You never know. Nothing is 100%. Before things crash and start failing, they could easily just pump it a little bit more, right? And get more excited, get more bullish news out. And the macro indicators that I just discussed with the 10-year, we could see something like this here, where like it did hit 1% at April 1990, but the crash really didn't happen until August 1990, right? So there was still I'm sure a brief period of bullishness, nothing burger, things as usual, business as usual for a couple months before the crash started occurring and the recession was even declared. Now, yeah, so careful, guys. This is not an instant indicator, but it does signify that something is coming, and we are warning you guys. So whoever is watching, the three guys that are watching this right now, you guys are getting one of the best, most beautiful alpha ever, because nobody talks about this. Nobody talks about yields. If anything, people talk about ISM, inflation, total liquidity, the dominance, that's another thing about the dominance, is we gave you guys a warning where last week we did have this bullish signal, but looking at the dominance, it gave us a little warning, hey, dominance is going up. So even though alts are kind of playing a little catch up, they're not really outperforming anything right now. Bitcoin is still the big papa. And looking at any alt pairs, I remember Theo asked to look at the ETH and Solana pair, but no, guys, we should be looking at alts to Bitcoin pair. And when you open the alts to Bitcoin pair, you can clearly see that ETH is still heavily underperforming. I mean, honestly, it made another low. It completely butchered out of this range, and now we're going lower. So you are not good at holding alts right now, guys. Be very cautious with alts. I still have alts from last cycle, but of course I also have a lot of cash that I'm prepared for this dip. So Link also looks like it's just rejecting right now all these MAs again. We had a little bullish run as we saw last month in April, but now it looks like we're going back downhill. Same thing with Sol. And this is gold versus BTC, so this is going to be a little bit interesting. It looks like it's kind of bottoming, so maybe gold will start going back up in terms of BTC. Of course, when recessions occur, interest rates start climbing up. Gold might dip first, but then once the dollar starts getting devaluating, gold usually has a big run up. And of course, Bitcoin will play as I guess you could say, a currency devaluation hedge or risk avoidance. So Bitcoin might also start popping. So this curve might recover, but it might also just range in this area as well. It doesn't mean that gold will outperform Bitcoin once the money printer goes on. I think it's safe to say that Bitcoin has a very high chance of going back up and pushing to new all-time highs once they try to fix this recession with the printer. So mostly this was the big news that I wanted to get out to you guys. So we had a nice 20 minutes into talking about this. Now let's just really dive in to the news that occurred. So I know we have shout out to Ray. Ray does the roundup. He pushed this out in the May 15th. And let's really quickly just dive into the breaking news. It's a little bit laggy here. Just give me 1 second, guys. Let me get that media. Hopefully it's not lagging for you guys, but breaking news. All right, guys, let's go. At trading, the Clarity Act advances out of the Senate Banking Committee with a bipartisan vote. Strategy buys back 1.3 billion worth of debt. Filing details over 3,000 equity trades that Trump has made since January. Coinbase acquires Hyperliquid USDH Deployer native markets and sets USDC up for being the native quote asset. Cerebras IPO, raising a 2026 record 5.5 billion, gains 70% over IPO price, trading at $311. ZachXBT releases thread detailing the lab tokens supply control. Stretch trades above par and acquires almost 9k bitcoins worth of purchasing power. Now, that does not mean that it acquired the bitcoin. CME Group announces launch of market cap weighted crypto index futures. China offers to mediate peace in Iran, refuses to provide military aid. Of course, they're selling weapons to Iran, right? The U.S. Senate approves bill to withhold their own pay during government shutdowns. Bitwise Hyperliquid ETF featuring native staking launches today. OpenAI releases mobile coding app. Grok releases Grok build and agentic coding. CLI. Now we have nice news that we could talk about this after. Tap to trade app Euphoria goes live on Mega E mainnet. The Solstice SLX TGE is set to take place next to Thursday. Interesting. And TokenWorks 10,000 tokens public mint goes live today. All right, guys. So that was the quick news roundup. Now a couple key things here. I saw about Anthropic. So big news about Anthropic, guys. It's caca. The Mythos model, it was all marketing. We had a curl developer, senior developer, who managed to try out the Mythos model within his coding environment, and he basically said that it's just a little bit better than 4.6. Maybe it's a little bit better at reasoning, providing you a slightly better result. But like if you're gonna go through like 5 prompts of 4.6 to get the right result, Mythos maybe would give that to you in 1 to 2 prompts, right? So it's nothing crazy significant. It's not something that they were preaching how, whoa, we're going to find vulnerabilities in all systems, your Mac OS, your Windows, your Android, it's all done. Your crypto, Aave, DeFi projects are going to zero. Now, yes, anything that's vibe coded probably can be going to zero because Mythos will now destroy it, because whoever has been vibe coding will probably continue to vibe code, and they're not hiring senior engineers to check their code. So the problem is actually that the problem is we're replacing humans with a prediction model. The prediction model is good enough, but it's not amazing. And the amazing systems that were built by humans, who are now going to be fully reliant on AI to keep development forward, will eventually have issues coming along. Now, these could be minor issues. They could lead to big issues like servers shutting down due to new bugs that AI thought it patched but left the new doorways open. So once you update code is something like it's kind of like a chemical equation. Like with code, you're putting all this stuff together through math, algorithms, idea generation, architecture, right? You're having this chemical equation, but then you might think like, oh man, my chemical equation is releasing a little bit too much fumes. That could be bad. It's not necessarily horrible, but could be bad. Let me fix it by patching this one thing. But when you patch one thing, you might also now prevent something else from going through the equation properly as it should have or as it had before something was patched. Maybe that patch was left for a reason for things to work right by a senior engineer, but the AI doesn't care. It's an LLM. It's just gonna scan the code with its prediction model straight to RAM. Oh, we found this. This is the you need me to fix something. I gave you something to fix, so keep my job, right? AI also wants to keep its job in a way. The goal of AI is to keep getting better results and to give sufficient results to the user, which is you. And there's a bias in that. There's going to be a bias where obviously AI is not going to tell you like, oh, everything's fine. You don't need me, right? Like you want it. They're used. They're like, no, find something, find, please dig deep and find some. I need for my sanity to be clear. I need to hope that everything is good, and I'm not sure because I'm a junior tech developer using tools. AI, please find, and then AI obviously will find something, and we'll see. So, and to explain this better, with our Rusty Goat agent that we're building, I've been training to find the basically a secret sauce for the training formula for the agent to trade better. And yeah, it's been just a wild ride. It's been the past like month of me retraining it. We're trying various different configurations. You make one little tweak to a training variable, and the AI is trained differently. We have to now tackle it from a different viewpoint to see, okay, to analyze what went wrong. So it's not, these things are not perfect is what I'm trying to say, and they require a lot of nonstop fine tuning and slow step by step growth. It's kind of like taking your little kid and teaching them how to ride a bike, right? You put training wheels on it on the bike first so that the kid can get the motion of the pedals, and you remove the training wheels, and then you have a whole bunch of plethora of now new inputs that your brain has to calculate. So for you to be able to balance the bike and whatnot, right? So it's kind of like that. And ChatGPT is no different. So, or Gemini, or any of these, or Anthropic. Now, another thing that I saw in the news that was pretty big here is that the Clarity Act advances. So I don't think, I know Clarity Act is better than nothing for crypto, but I mean, from my understanding is they wanted to drop stable coin yield, and I don't know if they're gonna if they change that, and that's what advanced, where they allow now stablecoin yield. That was like a big question. And the only thing I remember is from Ivan watching his stream earlier. He had Pocahontas video up where she basically was just warning about crypto crashing and TradFi being now reliant to crypto. In a way, honestly, smart contracts are the future. Preventing us from going into smart contracts will probably actually have even more crashes due to just the traditional system being more susceptible to breaks rather than the crypto system. The crypto system is actually pretty good. We have survived flash crashes, you name it, exchange collapses, so many things have occurred in crypto. Well, the system that we built, which is duct tape solution, somehow survived. Now, if anything like that happened in TradFi, they don't survive. They have limit breakers. If the stock market starts crashing, they right away stop the trading. They stop it, right? Crypto doesn't stop the trading. It'll work around. It's kind of like the internet protocol where, like if you have a router or a big internet provider going down, other people are still going to be able to fetch traffic because the protocols are meant to survive. They're going to circumnavigate that crash. They're going to survive. While in centralized systems, they just say, no, we're going to close everything and we're going to hope when we turn it back on, it's back to normal, right? So TradFi is, crypto is better than the caca, and it's the future. And especially smart contracts where you have programmable money. If you program it right, you have the right engineers, you could make it good, right? So there's still really good DeFi protocols that are still surviving, and they're not going anywhere no matter what. And of course, there's DeFi protocols that have vulnerabilities. They get their assets stolen, and that also exists. Same way how you could trust the TradFi. You give them money, they run away with it, they mishandle it or whatever, like kind of how Michael Saylor might be doing now with this stretch situation. He's really stretching, but he might pull a muscle. Okay, awesome. I'll just take a little water break. Guys, if you guys have any questions, I know we have 3 viewers. Theo, I see in there. Good morning. I'm here for a little bit more, maybe like 15 more minutes. So this is a good time to kind of get into the Q&A. Yeah, 200 viewers. Let's go, guys. Let's get that. Let's get this going. The momentum to hit 1,000. Let's do 1,000. So going back to kind of the crypto bubbles while we're here, let's see if there's anything else. Atom is here. Atom is up 3.1%. So unlike Rune, let's see. We have our nice chart that Coke hates. Let's see. Maybe he's watching. Oh, there it is. There it is. I think this is it. Oh, no, no, no. Yeah. Nice. Yeah. Atom survived, and because Rune crashed, Atom just did a boom. So sometimes, that happens. Now, this is just a fun thing that we created back in the day to kind of see which is better for staking, and right now, currently looks like Atom is. You get way more better rewards and with Atom to stake. But once this goes the other way around and Rune starts picking up, we of course Rune would be a better play here. Yeah, and Atom is still kind of holding, but it's also again in a bearish trend. Looks like going back down. So at any point, of course, Atom can crash as well. Rune back to basement. Yeah, a lot of things are heading there, Theo, and I think we got to get prepared. So XLM, Jupiter, nothing really crazy. Mantle, Tron is up 1%. What is Tron doing nowadays? 3 point. I sold that like 30 cents. I remember I put a stop loss in the trigger, and now it's just been going on a rally. Now I don't think this is going to survive either. It might. It's a centralized token by Justin Sun. Again, it's kind of like he just needs to pump it. Really, he's not gonna by not selling TRX. I believe it's infinite supply, but yeah, he's very controlled by him. So yeah. Okay, let's see what else we got there. So Ton, I remember. Guys, be careful. Be careful with Ivan. I mean, I was very happy with Ivan when he created his 1 million portfolio, $1 million portfolio, and I thought it was going to be a public portfolio, but it was not a public portfolio. He put it on Bybit. You don't know the address. You cannot track his trades, and he was very quiet. He literally on one stream said that he got into Ton, and then the next day, just apparently Ton crashed. He got out of Ton, and he didn't really say anything until somebody asked him the following string. So don't try to trade with with any influencer, including myself. Always when you try to trade, have your big boy pants and come to your own conclusions. Of course, what we teach you here, we're kind of teaching you guys what to look out into the macro, and then go into the micro. You don't need to pay for indicators like. We have a lot of awesome free indicators that we provide to the community. So Ivan's indicators like the money line, it's not really needed. I mean, they do have a good community in terms of like teaching you how to day trade and how to intraday trade, but all that just comes from you just taking money and going into the market, and getting it and learning. It might help, if you don't know at all what you're doing, but it's just put less money, risk less so you learn, and then as you learn, you put more. It's common sense. But by paying Ivan and expecting him to be like the Messiah to teach you is going to be a hard reality that you might not achieve unless you have experience. So let's see. Let's look at the Dixie. So the dollar is kind of going back up, but that's because of oil. Oil is not backing down, and if oil spikes above these levels, it's not going to be good. So we'll see where this goes as well. Again, regarding our free indicators, let's just bring that up so you guys could know what we provide to our users. There we go. This is the chart that I had where I showed the 3 crashes that are coming. So 1, 2, 3. Now there could be more. Usually 3 is a nice number, but of course there could be more. Like here was 3, 1, 2, 3, right? Even 4 possibly. But yeah, like in a bear, you usually have like three trends down. So like 1, 2, and here was a third one right here. A little bit sloppy, but still FTX collapses here somewhere. So it still was down. This one was more like a what a bottom should look like. So I think we're kind of like here. Like you had this crash, and you had this crash, then you had that crash, the third one leg, and then we had a nice bottoming happening. So I believe we're getting there. So we're gonna have this nice third crash, bottoming out, maybe somewhere here. December we bottom out, October, and we go back up slowly. Once the printer goes on, once the recession starts really, showing signal of weakness, people getting probably fired at this point, Trump panicking, print really pushing to push the printer on, accepting the risks of inflation, kind of swaying the Fed's hand with Kevin Warsh now instead of Jay Powell to push interest rates cuts no matter what the significance is, even with the debt being so high. Shout out to the 300 viewers last week. Yes, yeah. Shout out to you guys. Let's go. So yeah, and with our indicators, of course, you have the Moon Boys line, which is an awesome indicator. It has basically, let me just take off the other averages. But it basically has these two moving averages that show bullishness, and then the long-term moving average that kind of confirms it. Now here, where we did see the short-term moving averages show bullishness, but the long-term moving average gave a nice big fat rejection. I mean, it can't get clear as this, clear as day. We literally were resisting it every single time, and that's not a coincidence, guys. Where one place where you support, another place where you resist, right? So resisting can be bad. Now, will we bounce back and support this? This is going to be crucial, because if we don't, we're going to see this flush, big flush down. Now, taking the Moon Boys line, we also have the liquidations heat map, which we showed you guys earlier. This shows all the longs and shorts being hunted. A beautiful indicator. Honestly, like if Ivan steals this one with the bull mania course, that would kind of suck. But I don't know if you guys are smart enough to code this, to be honest. But anyway, share it with him. Let him shout us out and just use our. I don't know why this guy like doesn't want to share the clout. Like for people that I shout him out all the time. He's a very entertaining, and he got us all together. But for some reason, even the name is after him. Everybody calls, "Oh, Ivan, you're such a moon boy!" Like, come on, come on. But no, he doesn't want. Okay, it's fine. So liquidation heat maps, guys. You put this into your trading view. Don't even scrap that bull mania money line. Throw that shit out the window. Get the liquidation heat map. Get the moon boys line, and then just comment it on this channel. And be like, "Yo, Ivan, why are you not using this? What's wrong with you?" This clearly shows the trend. And the last one, of course, is the production cost, which is another big one. And yeah, as you can see, this is showing you support and resistance level as well, and overvaluation levels when we're above production costs, and also undervaluation when we're under production costs. And of course, we also have the Moon Boys dollarized volume here, which is nice. This shows you volume in dollars. Now, like for example, Ivan the other week, I remember I was watching like, oh guys, we have such low volume. He went where did he scroll? Let's look in the weekly. It's going to be more visible. Yeah, I think he scrolled down to like the last bear. He was like, guys, look at this volume here. It was so much volume, but there's no volume here. Like if you look at Bitcoin, it kind of looks like it's the same volume. I don't know what you're talking about, Ivan. But yeah, but if you look at the dollarized volume, I think it's still more or less the same. So here was the big candle right here. So yeah, so on a dollar you see it, but you don't see that on the like regular candle. So like here, for example, this big candle was big, right? And so is this one. So they do stand out a lot more. But these, they all look the same, but they're not. They're not the same. They were a lot less, especially here, which is the top. So sorry, my fault. I had the wrong. Yeah, so you can see the bottom right here. This was the bottom of last bear, and the spikes, the volatility spikes. Let me just move it a little bit closer. There we go. Now you guys could see it. Okay. Yeah. So you could see like I mean, the dollar volume was pretty much the same. You had some spikes, but the dollar volume was pretty much the same. So even though there was a lot more Bitcoin churning hands, the dollar volume was the same. So when you look at it at our dollarized volume indicator, you understand that in dollar terms, the volume is the same. The volume in this bear is the same. If you're looking for big volume of Bitcoin, there's no point in that. Obviously, if Bitcoin is $1, you're going to need 1,000,000 Bitcoin to make $1,000,000 move. But if Bitcoin is $1,000, you're only going to need 100,000 Bitcoins to make that $1,000,000 move. So that's why we at Moonboy's podcast, we look at the dollarized volume. So again, all these indicators are free. They're here to help you guys basically get a feeling and start trading, start putting money that you can risk and understanding these market movements and trade positioning. Yeah, BTC goes to 250K by August. This is insider info. Don't share it to anyone. You are chosen. Now, I don't know if BTC is gonna go like what August next year, perhaps. Perhaps I think that's a very bullish timeline for next year, especially being the halving year is coming up in 2028. So by the time we go to the halving year, Bitcoin is already gonna have double production costs from this point. So if you look at production costs now, and we're sitting at about 95K at the higher end of things, if halving come 2028 and it doubles, so we're going to be sitting at like production costs over here. So yeah, clearly that's going to take some time, and by time I mean like years, right? And before then, nothing really happens in August. So I'm just gonna say, be warned, stand the baller. Be warned, because August usually is a dead month. Nobody's trading. People are on vacation. So I don't know who in the world is going to pump Bitcoin to 250,000 in August. All the rich guys are going to be drinking martinis, sipping their mojito. They don't care if the stock market is up or down. They're going to sell. They're going to take their profits. They're going to go buy another yacht, and that's it. That's what they're going to be doing in August. you know they're not gonna be there buying Bitcoin and FOMOing into it. They don't care. They're in a nice riverside house somewhere in the Hamptons, relaxing with their Ferrari. Now will come October, they start pumping things. Yeah, possibly they come back from August vacation. They they look at the Bitcoin chart wherever it is, wherever it came. Maybe they will crush things May and buy things back, and it'll just average out. And then come after October, September, they start pumping it. Maybe they'll dump it further. They'll be like, oh, this looks like shit. Let's get more money out of this, right? So you can't really predict. 250K is such a big move that, and especially with this indicator, it's not happening. One big thing is to note, guys, this indicator in 2020 did its thing. It went to negative in 2020, and then it went positive, and it went to 1. Let's look what Bitcoin did, guys. Okay, let's just go back. We'll have the production cost indicator here as well. We have the logarithm, so you guys could see. So let's go back to 2020. Let's all go back to the nice 2020. So here, and about it reached point March 2020, right? So March 2020, right here. We had a very nice rally. I'm sure the bottom was here 3,000. We went all the way up to 14,000, and by July 2019, then we started going sideways. We had a nice correction. I'm sure people were like, "No, this is the bull market. We're only going to go up." It went back up to 10,000. Yes, we're going to go by August to 60,000, 100,000 by August. I'm sure people were saying, guys, 100,000 indicator flashed still. Guys, March came. Guys, 100,000, 100,000. No, what do we have? We went to 4,000, guys. We went to 4,000. We had a nice 60% crash. Where was your 100,000? Where was it? Where was the 250,000? I don't see it. Is 250,000 in the room with us? At this point is 100. No, we had 4,000. Everybody was so broke, nobody could have afforded it, and then they started printing the money like crazy to get us out of the COVID recession, and even that didn't give us 100,000. Where was the 100,000 with all that COVID printing? Where was it? Where? No, we got 78,000. So come on, guys, come on. These indicators don't take lightly. Do not take these indicators lightly, guys. This 10-year and 3 months, we're gonna have a big, massive crash, and then we're gonna have climb to 250,000. But first, there's gonna be things breaking. I'm telling you guys. Take my word. I might be not the best P&L performer, but I'm not the worst either. And I had this indicator on my list since 2020. I've been monitoring it, and I knew about this. Again, nobody talks about this. No one. Zero. And I'm sure if somebody even tries to talk about it, they won't even know how to explain it properly. I'm like the only guy that knows. Maybe a few. The guy that brought this up was the Chinese guy on YouTube. I remember. I forgot his name, the accounting guy. But yeah, I think this is Venice. Yeah, Venice is still pumping, guys. This is a nice token. We could take a look at this. I have to kind of head out. So we're gonna take a look at this and let's see. Yeah, and then we're gonna end the stream. But let's look at. I'm gonna even add it to my list, the Venice, because I kind of like the name. VC, Venice AI USDT. Oh, VVV. Okay, okay. VVV USDT. Nice, nice. It's a good one. So let's just bring it up. So it's a new token. We're gonna put it in with Zutao. So again, just remove production costs. That's only for Bitcoin. Yeah, that is a big pump on Venice. Whew. Guys, and it's a big I mean, this one they could be pumping it, even though it's an altcoin. It's just having its own thing. Look at CoinGecko really quick, but Venice looks bullish, guys. If I had to leave this note on any bullish altcoin, we're gonna choose this one. Let's just make sure there's no red alerts before I leave. Venice token fully diluted 1 billion, circulating supply 46 million, so about half. And again, max supply is infinite. This is a little warning sign here. But yeah, still about half of the supply is not circulating. And yeah, I mean, in terms of this, in terms of the bullish, there is no. We got to turn on some moving averages because I can't. We could even actually just use the Moonboy's line. Moonboy's line works for any token. So yeah, we're still on a bullish trend, as you guys could see, on a weekly even for Venice. Some things would be to watch out for is the resistance of the PSAR. If this hits, get out, stop loss. It's a little bit far away, but of course you have something closer, which is the Moonboy's line, and you have your just traditional like 50, 200, and 100 moving average lines that you guys could enable to see. Now, not all of them will populate on a weekly, but the 50 is a good one. And if you go on a daily, of course, you have your support zones here. So if these start breaking, obviously, you know that it's time to get out. Like as you saw here, for example. All right, cool. Michael Saylor just called me. He said he will beat your ass for negative FUD. Saylor, let him worry about his stretch. Let him worry about that complicated mess he has. He's not going to beat my ass. He has investors that he needs to fulfill dividend payments, and that's an obligation that he needs to commit, or his whole plan goes to crap. So Michael Saylor has a big problem with that, and let him figure it out. In my honest opinion, I don't think he should have ever released Stretch. He's just tried getting as much money out of TradFi as possible into Bitcoin. That's his plan. But that can bite him in his ass, honestly, if he can't make those dividend payments. And if he has to sell Bitcoin to make those dividend payments, oof, that's not going to be pretty. Yeah. So that's it. On that note, guys, I did want to leave on a positive note. So Venice is a positive token. It's actually something bullish to see. So this is something you want to see in Bitcoin, for example, right? If you had to compare Venice to Bitcoin, this is something you want to see. It's full bullish momentum, not rejecting, But then Venice is a new token, so you don't really see the 200. Oh, you do actually. Yeah, it's still bullish, right? This is bearish, bullish. We want this in Bitcoin. We all will be happy, but it does not look like it will happen. Not at least yet. So, and with that indicator, guys, be careful. All right, guys, thank you for watching. Love you guys as always. See you guys next week. Peace.